Yo, what's going on, guys? Got another trade recap for today. Today is Wednesday, October 1st, 2024. So we have made it to Q4. So, firstly, before we get into it, I want to thank God that, we've made it. If you're watching this video, we made it to three-fourths the way through this year. And you should pause this video right now, say a prayer, give your thanks, and just thank God that we've made it and that we woke up today, that we've got two eyes, we've got our limbs, we can move, we have breath in our lungs, and that we are blessed. But going into this trade, I also want to give glory to God. I want to thank Him that He woke me up today. And I just want to remind y'all to be praying to the Lord Jesus Christ, to be asking for guidance and strength in this life, because I know there's a lot of rocky situations going on with countries outside of the United States, with the United States, with whatever. But I just want to just let y'all know that we need to be keeping our faith strong. We need to be in more prayer, not ceasing in prayer, and just keeping it up and doing better, guys, than we did yesterday. But getting right into this trade, today we took a really, really nice A+ setup for me, because I saw some things that maybe other people didn't see. I saw some people grade this as like a C+, but to me, without this, kind of up retracement down and then back up, it's a pretty good one. But let's go ahead and do the top-down analysis for it. Where the heck are we? So our draws today, we can see that we're bullish. We're nearing all-time highs again. We can see that we were just on an uptrend. And you can see that when we do that, we have these uptrends. We might have a pullback, uptrend. We might have a pullback into gaps. We have an uptrend, a little pull, uptrend back, uptrend, pullback, uptrend, pullback. We're coming into these gaps, we're filling them, and we're extending higher. So that's just, we're respecting this daily gap at just as the same as we respected these two daily gaps. So moving into the 4-hour, one thing that I liked to see on this 4-hour, or actually I wanted to see it either way, because today I could have been bearish, I could have been bullish, depending on what was happening. But on the 4-hour, I really wanted to inverse this 4-hour, because this 4-hour candle closes at 9 a.m. Oh, news. And news today came out at 9 a.m. So we had 7:15 news, which had a small little candle wick, but then we also had 9 a.m. red folder news. So I was waiting all the way 30 minutes after market open to start trading and looking for anything, not just forcing a trade, but waiting for price to play out. And if this candle closes at 9, I really wanted to see this 4-hour invert this gap, and then we could get higher. It didn't by just a tad, so I had to just get off the 4-hour and then go into the 1-hour and then see from there. So in the 1-hour, one thing that I liked was this whole inversion right here. So we had a huge 1-hour inversion. We had a huge leg down during the London session overnight, and we inverted this 1-hour, showing some bullish respection. We left this bullish 1-hour right here. And another reason why I didn't think we would come lower and take out London lows as a bigger draw is because of this 1-hour gap right here. We can see that London low is inside this 1-hour gap. It's right in this 1-hour gap as well. It didn't close below and then have the wick below. The wick is just in this gap area right here. So this is a protected low and does not have to be traded back into. And then we can see that, during our trading day, this also got taken out. But to go into it, on the 5-minute chart today, we have market open. And as soon as market opens right here at 8:30, I know it's a little messy. We can take this off. Take that off. So we have the, as soon as market opens, we come and we sweep Asia high, and we come back down, and we have this 5-minute inverse. But like I said, I'm waiting for 9 a.m. news to happen. So I was not even looking intently to take a trade. I wasn't trying to do anything like that. But again, we had that 7:15 low or sorry, data and news candle. So that right here is the 715, 716 right here. So if we go on the 15-minute chart, we have this 715 candle, and right here at the bottom it says that. And then if we go on ES, we also have this 715 candle, and it's in this 15-minute bullish for value gap. So this is a 15-minute internal low, also with the 15-minute news candle. So NQ, right after we invert this as market opens, right 10 minutes before news happens, we come and we sweep out this low. So we can see that we have a bullish SMT because this low right here is taken out by one index. This is 7:15 a.m. And then we can see that this 7:15 a.m. is not taken out by ES. We know now that this is a liquidity sweep, and if one index sweeps a lower point and the under index does not, then we have a bullish SMT. Just as the opposite side, if one sweeps a point and the other does not sweep that point, then we have a bearish SMT, and we would be coming downward if we get the inversion stuff. So right as 9 happened, we have this 5-minute inverse right here. Didn't know I took this one off. Yeah. Oh, this is ES. That's why. So right as 9 happened, my bad. Right as 9 happened, we had this 5-minute inverse, and we had the SMT. So in my head, I'm like, all right, cool. We have the sweep of liquidity lower. We had a 15-minute internal low. We have this 5-minute inverse for value gap. And so after this, since it's the first of the month, since we had 2 red folders, I'm just also going to want a little bit more confirmation. And I saw this 1 minute, which would be the next confirmation to take, because 1, we're sitting on our hands waiting for news. We're still sitting on our hands until we have a sweep of liquidity, which we got right here with this SMT, taking out that 15-minute internal low. And then right after the sweep of liquidity, we're looking for the highest time frame inversion. And today it was on the 5-minute. This 5-minute gap inside the one trading leg. Blue candle, black candle, blue candle. It gets inversed and taken out. I know some people took the trade right as it inversed, so they were a little bit up there. But because of just a couple different circumstances, I wanted to have a retracement down and then go up. Luckily today that did happen, but usually I scale down to the 1 minute, and the 1 minute was right here. I'll delete this other one, and it got closed below. In my head, we closed below that. That was going to save me, because this is the point where I want to trade into this gap right here. I do not want to close below it. I just want to wick in here, or like a body closure in here, but I do not want to go below the green, because that tells me a little bit of flip and order flow. But then we started getting displacement above, and so I'm still flipping through the time frames and everything, and there's no 5-minute. We were just on the 5-minute. There's no 4-minute gap. There's no 3-minute gap. But there is this 2-minute gap that was here. So instead, today, of me using the 1-minute confirmation gap, I used the 2-minute today. So we inversed the 5-minute, and we could have entered here, and the trade would have played out the same. We were looking at the 1 minute because that's what I go to after. But I saw that we had this 2-minute confirmation, and right as this blue candle comes out at 9:08 and it's telling me that we're getting buys out, I enter right here at 9:10. So I'm entering at 9:10, and so now we're entering. Firstly, let's deal with our stop loss. Originally, if this gap was going to hold for us, I'm just going to put it in this gray so we can see it a bit. If this gap was going to hold for us, I want to see us not go below, for our stop loss, what that would be. So because we're taking it off of the inversion, we know that the fair value gap, we know that a fair value gap is a 3 candlestick pattern. So 1, 2, 3, where the wicks in the middle do not touch, and that is the liquidity gap right there, meaning that there was a lot of buy orders, and the retracement would be a pullback to fill in those orders to continue and go higher. So the original stop loss was going to be here for around 27 points. But because I used the 2-minute, that's what we're going to be looking off of. If you enter off the 5-minute, you're going to be looking off the 5-minute. If you enter off the 1 or 2-minute, that's where you're going to be looking to put your stop loss. Since I entered here and we're going off of this gap right here, if you remember, I said it's the three candlestick pattern where the wicks do not meet in the middle. You can see that in the middle of this gap right here, wicks are not touching and there's a gap. But do I really want my stops all the way down here for minus 60 points? That would be minus $500. So in my head, if this low right here, is a wick low, this right here, more we can go in the 1 minute and look at it closer. If this wicks below right here, we do not close below that 2-minute gap and we get buys out of it, this is a perfect place to put our stop loss. Our stop loss is 20 points. That was only like $150 maybe. And we're able to have less of a more aggressive stop loss, because let's say a candle does come down here and close right here, it's more than likely that we are going to just come straight down, and then we're going to come down and continue and probably take out data low. Do I want to be in the trade for that long, all in draw down here, and then it takes me out for then it to maybe come back up? No, I want to make sure that I'm trying to take extended profits and that we're trying to negate losses as much as we can, and we're trying to be smart. So this stop loss placement was pretty perfect today, because it was the low of the wick of the candle that respected this bullish gap. Sorry, that made it took a little long. Coming into the break-even point or the take profit points above, of course, we have a buy-side liquidity resting above. So right as market opened, we took Asia high out. And so Asia high is a huge draw in liquidity. We can literally see how the market moves, right? Market opens, we move, we hit a draw in liquidity up top, we get rejections off of it, we hit this 15-minute internal low, we hit another draw in liquidity, which is the 15-minute internal low, and then we go back up. We came up, this right here is previous day high, we got a pullback, and now we're continuing up. So that's just how the market moves, right? So bouncing off these liquidity points, I wanted to make sure that I was taking a break even today if I was going to have extended take profits like I did. So my break even point on the day was when we passed the high of market open. So market opens at 8:30, obviously, and when we take out this, the high of what we made to come down first and then sweep another liquidity to go up, this would be our buy side liquidity right here. All these, failure swings, we have relative equal highs all through here. And as soon as we hit this at 8:37, I went break even. So as soon, we're up in profit, we're going up. And as soon as it touched, not as soon as it formed, a full candle over, but as soon as the wick touched that, boom, this is now a risk-free trade. So I'm $5 in profit right here. Just if it does by chance reverse and all it wanted to do was take out, the market open high and then come down lower and go to, data lows, this 9 a.m. data low, then that could have happened and I would have been safe on the trade completely. Now talking about take profits, we can see that previous day high was a draw on liquidity and it did eventually get hit. We can see that this is today the 1st and this was yesterday the 30th, and that's previous day high. If we go into the 4 hour, if this is previous day high, there's no other liquidity point on the 4 hour. If we go into the 1 hour, we can see that there's no other liquidity point on the 1 hour either. This is just the same previous day high, 4 hour high, 1 hour high. We got to remember that a high is a up candle and then a down candle, And then we have this 30-minute high. We have this 30-minute high right here, and then this is previous day high. This is where I took my take profit. Also because it was a really good risk to reward for me, and I'm not trying to get greedy. I'm not trying to be up a certain amount where I'm good. I could take that money. I could be really good for the day, but I think it could go higher, or I know where it's gonna go. The higher time frame holds higher power, it's probably going to go to previous day high. But do I really want to be in a trade past my 10 a.m. cutoff point? Do I really want to be in a trade for extended time if by, how long does this trade take? This trade took from 9:10 to 9:21. This trade took 11 minutes. Do I want to go through all this chop right here to then get in at 10:01? So it would have been, 50 minutes into that trade instead of 11 minutes just for, this much more. Which there is a point where I could have done that and I could have put my stop loss into profit. So if we do come out, I'm trailing my stop loss higher and we're just trying to get as much as we can. But at this 30-minute high, what I earned right there was perfect for me on the day. And for 11 minutes, it was beautiful. So I didn't want to get greedy. I didn't want to, try to continue up higher. Like this 936 candle would have killed me. We would have been right there and I would have been so hype just for the next 30 minutes to just been chopping around and I would have been pulling my hair out. So I'm not really about that. I really want to take base hits. I want to treat these prop firms with respect. I want to treat the market with respect. And coming into quarter four, I just want to, make sure that I'm, giving it my all, coming every day and using my brain for everything, noticing the SMTs, noticing the inversions, noticing maybe don't go to the 1 minute, but maybe there's a 2 minute gap that's getting respected. Hit a really good break-even point. Hit those base plays that is going to, result in taking a payout one day. So that was the reasoning on that. That was the 30-minute high, like I said. Something that was a little bit bothersome to me was this 15-minute internal high right here. So, of course, the internal high means that it is in a fair value gap, which is right here, this 15-minute fair value gap, 3 candlestick pattern. The wicks do not touch. And this is a high. It's it's an up candle, then a down candle inside this gap. That could be a rejection point. It really could have been a rejection point. But I was already break even on the trade, so I'm way down here. And actually, as we were, coming up pretty far from my entry point, I was trailing my stop loss. So firstly, my stop was like right here, right at the line for like +5. Then it was here at this new low. Then it was here at this new low. And I was just trailing it because if you're, going up in a trade, you're going to be trailing your stop loss at lows because you don't want to see the trade break below a new low. And the same, if you're taking this trade down, you're going to be trailing at new highs because you don't want to see the trade breaking at these highs. So I really just had to be confident in my draw and liquidity and obviously took that out with ease. You can see that as soon as we took out the 30-minute high, the displacement from here to here, so fast, 11 minutes. But now, this 30-minute high to the next draw and liquidity, it took, this rest of 40 minutes right here. So we can see this is really where the market wanted to go within the time of the trade. And then after here, we started chopping around. And, of course, we eventually made it. But I was already out of the trade, and I was already, getting ready for the day. But this is it. This is the trade today. It was a risk-free trade, and it was a really good setup, seeing every single point. I know I'll be yapping, but to go over it again, it's that that bullish SMT below, taking out that 15-minute internal low. Then we have that 5-minute inversion, which is the highest time frame in the gap that I want to look for. It could be the 5, 4, 3, 2, or 1 minute. Then after that, I really want to see that confirmation, just to have a little bit more confirmation that, higher probability. I want to be stacking my probabilities in this market. And then adding the break-even point. So now we're risk off. And then going to a trade, originally the trade was here to here, so it was a perfect 3R. So a 3R trade today, risk-free at one point. We went break-even around the halfway point, and we were trailing our stops. So everything that I learned in the month of September, I used on this October 1st trade today. Everything that I did, I traded almost every single day of September. That's not a good thing, to be honest, but I did learn a lot in September. It was, the first month I'm taking everything alone, not looking at, other people's or lives or things like that. Had a green month, and I just want to make sure that I'm remembering everything I learned. And I tried to pack it all up yesterday. I wrote some things that I learned in September on trading, and I just kind of packed it all up. I read it this morning, and I wrapped it all up and was able to execute beautifully today on this first of the month. So, yeah, that's pretty much it, though. This is quarter four, so hopefully in these last 3 months, I can be smarter about things and try to, keep these trades coming. But thank you for watching, boys. Remember to be praying. Remember to be loving the Lord and be respecting everybody. I love y'all. Y'all have a good day, man.